Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in to the show. You know, each and every week we come to you via several different mediums. One of the ways we can is through our podcast. About 8 or 9, 10 of them that we're on. And I think, Daryl, you got the list there?
Sure do, Jeff. It's Apple Podcast, Spotify, Spreaker, Stitcher, iHeartMedia, Radio.com, YouTube, and Podclips.io.
Excellent. Podclips.io. I push that all the time because it's a great place where you can go and you can hear a number of different opinions about a number of different subjects, podcast style. Mine is finance, of course. The real estate world, there's a couple other finance guys there, as well as lifestyle and sports and, there's all kinds of things on there.
Some health shows as well.
Oh, yeah, that's
Wellness.
Right. That's absolutely right. So if you are looking for a good place to find all kinds of podcasts, podclips.io, that's where to go. Okay, thanks very much for tuning in. Again, I'm Jeff Barton. This is The Mortgage Voice. So if you're out there and you're looking to buy a house, if you're out there and you've fed up with looking to buy a house, or if you've decided not even to look for a house or think about it because you're comfortable where you are and you just don't think you can afford it. I hear you. I hear the pain. But the pain is about to get a little bit better, meaning that housing inventory has been going up, and it is going up significantly in some areas of the country. If we're talking about the areas where the show is broadcast, Albuquerque or Las Vegas, Nevada, the Inland Empire, Riverside, San Bernardino counties, or up in the Lake Tahoe area, yes, these areas are going to see increases in their inventory. And the main reason why is because the cost of housing and the way that housing prices have escalated over the past 6 months to a year have really priced out a lot of people. A lot of people meaning first-time home buyers, a lot of people meaning step-up market. In those areas, if you are working, or a couple of you are working and you're a family and you're looking to purchase, inventory will go up. Now, what does that eventually mean is when we get large amounts of inventory and the months on market go from 2 to 4, means that we'll be entering more of an even market. 4 to 6 months of inventory is really an even market, maybe even slightly tilted towards the buyer. We're heading that way, but will we get there, and will prices stabilize enough so that if we buy at a certain price 6 months later, we're not going to see a downward spiral on that price? Now, why do I say that? Because there's a lot of people who are talking recession, the big R word. Nobody likes the R word, but then again, nobody likes being priced out of any kind of market. The inflation on housing, the inflation on the cost that it is going to take you to buy a house. Now, nobody talks about housing as inflated, but of course it is and has been since COVID. Now, we've been on an upward trajectory since 2009, 10, 11, about 2011. We came out of the pandemic in really rough shape, especially some of the markets that we're in, Las Vegas, Albuquerque specifically, Riverside, San Bernardino counties, absolutely. A lot of people were upside down in those houses, and it took 6-7 years before the house and the worth of that house was worth more than what you owed. And then we saw tremendous price appreciation during the last 3-4 years. I mean, like 20-25% in some markets per year, which is astounding, really. But now we're in another cycle. We're in another, what's happening with my house, what's happening with my house prices, where are we going to see? And you can see this because all over the media, and by the way, my own personal opinion about the media, you got to kind of pick and choose on the financial side what you're looking at. Now, I know that you've got a political viewpoint, and I see many of those people on all my social media feeds. And I'm on a lot of them because I try to pass the word of what's going on in the financial markets, what's going on in the mortgage markets. How's this information I'm providing you going to better help you make a decision on buying and selling real estate? I mean, that's what I try to do. So I'm really out there, so I see all this stuff. But you gotta pick and choose which financial stuff. There's a guy on Bloomberg, and he's what the heck is his name? His first name is Dave. Anyway, Dave's great. Power Lunch or Power Hour or something like that. And I've been listening to this guy 10, 15 years. Base news, but a real breadth of information across the spectrum of finance and financial, really ins and outs of markets, whether they're real estate or mortgages or what makes things happen. And he knows everybody. He's a great source of information. Now, I listen to the person on the radio, but you can get him really free of charge from anywhere on your computer. Just go to Bloomberg.com, listen to the Power Hour, and you'll hear what I mean. Because that information, now we get our information not only from there, but we get it from a number of different sources with which we bring it to you. And we try to bring you that information without comment, although it's very hard to at times not comment, because today we are waiting, and this show records prior to the day we're going to air it, but the Fed is about ready to raise short-term interest rates another 0.75 of a point, 75 basis point. So every 1% of a thing is 100 basis points of a thing, just so you know that when we talk about these numbers and how they really are sold to the public, the Fed is supposed to take care of the inflation issue, right? And we all have this undying faith. Why? Because we don't really know anything about what the heck they do or what even this does, other than, hey, it looks like inflation's coming down, so they must have done something. Well, inflation isn't coming down. Where's my note? I mean, you all know the number, right? 9.1% inflation last time out. That's a yikes, by the way. That's kind of an unbelievable thing. But the Fed has this mandate to keep inflation or the economy at a certain level, even keel. And that really is a target of about 2% inflation. Well, we're at 9.1% inflation, and if you include other things or not include other things, it could go up to 10, 11, 12%. In some areas of the country, food is just out of control high. Cars, certainly. Gasoline, yes, everybody knows. Even though gas prices have been coming down, I think that's a good thing. But that's a function of people just saying, you know what, I can't afford it. I'm either going to feed my kids or we're going to go on that drive vacation to wherever park USA. Well, many people can't afford that, so they stay home. Less gas being bought, prices are dropping. That's really what it is. It's not about capacity. It's not about drill, baby, drill. It's none of that. It's just the people stop driving, so therefore the price comes down because there's just too much gas and they got to sell it. All of these things that we talk about with the Fed in this sort of Doris Day glow around what they say. Now, this meeting, Fed Chair Jerome Powell come out and talk about inflation and what they're going to do about it, and it's the main point. There's some question in my mind, because I'm a contrarian by nature, does the Fed really know what's going on here? Or are we just pushing buttons until something works? And I say that because there is a group of economists who actually believe that inflation has way more to do with the war, has way more to do with what's happening in China, has way more to do with COVID. These three pillars have really kept prices where they are. Now, there's a show out there, John Oliver. I don't know if anyone's ever heard of it. Anyway, he does it on HBO. I know that's an elitist kind of left-wing network that we watch people on it. However, he has a great explanation, if you Google him or whatever it is, John Oliver, about what inflation is, how it is affected, what we can do about it. And he takes a very middle-of-the-road approach, just explaining it. So if you have an understanding of inflation, it's really something that not only can the Fed not control everything, they can't produce cars or produce whatever it is, chips that we're lacking, therefore the price of goods go up because cars needs X amount of chips and we don't have them. No, the Fed can only work on one aspect of inflation, and that's what they're doing. They're raising interest rates. I really appreciate you listening. We got a great show lined up for you. We'll talk soon, and thanks very much. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning into the show this week, and each and every week you can hear us. We're on 5 radio stations in 3 different states. We have some great people that join us, listen to the show, and also join us from these areas as well. Down in Albuquerque, New Mexico at K-Mine Country. I want to thank those fine folks. In Lake Tahoe at K-Tahoe, I want to thank Daryl and all those people up there who bring us to that particular area, as well as KCAA and what's the other one? KMET, yes, KMET, and that's San Bernardino, Riverside counties. And, of course, in Las Vegas, Nevada, AM 1400 KSHP. Thank you very much. All of those radio stations carry the feed and have historical records of what we do on the show. If you wish to follow us, you can always go to YouTube, Jeff Barton, the Mortgage Voice. You can see us, hear us, and you can look up, I don't know, we have how many hundreds of shows on that, Daryl?
300 easy.
Okay, that's a good number. Let's call it 300. Excellent. All right, anyway, I'm Jeff Barton. That's enough of the commercial from me. We bring to the show people from all walks in our industry. We try to explain and really help you figure out what the best particular decisions to make that you can make about getting a mortgage. And one of the people that we're going to bring on, first time on the show, Ryan Crockett from True Concept Title. We don't have title people on a ton, but we used to have him on a lot more, and I'm glad he's joined us now. Ryan, how are you?
Very good. How you doing?
I'm fine, thank you. Thank you very much. Okay, so the obvious question for a lot of the listeners, because they know that it's an expense on their when they're buying a home, title, and they see it down there. You give a brief overview of what title is and how you protect the buyer from any kind of fraud on title.
Mainly what you do is title insurance protects you from making sure that nothing comes up from a previous owner, no kind of tax liens or any kind of other existing expenses that could kind of sneak up on you from somebody that owned it previously, protects you from any kind of property line disputes, things like that. Basically, so that nothing kind of sneaks up that you weren't aware of, from that you had no way to know of previously.
Excellent. Okay, so in your business, do you run across problems that borrowers should be made aware of that maybe some other companies may not be aware of either, meaning that they wouldn't either tell? Or what are some of the typical things that you would run into if, in fact, there are some issues on title?
With purchases, you find like a lot of things, especially depending on how you buy it.
Right.
If there might be some municipality liens and things like that, water bills, HOA liens can come up quite a bit. Things like that. It just things that have to be paid and they do go against the property, but don't necessarily get recorded as a lien on just a regular public record. But they're there still, and they still could potentially be a lien once you own the property.
Right.
And title insurance protects you against those kind of items.
Okay, that's excellent. In dealing with properties and sales of properties, either on loans or, as you said, in the insurance industry, we deal with solar panels. We deal with all kinds of other issues that do come up. You mentioned HOA. I love that one because there's no real out for that. And I always get borrowers who say, hey, can't you bond around that? And I'm like, bond around that? I didn't even know. Is there a solution to a lot of this stuff, or is it just you got to pay it off?
Well, if you're talking specifically HOA, you have to pay it off.
Right, right.
I remember when we were first coming up, I learned, back in early 2000s, of a situation where somebody actually lost their house over the color of their door.
Oh, my gosh.
Because they wouldn't repaint it.
Oh, my gosh.
But the HOA has total control. They come before every other lien, before any mortgage. You have to pay them off.
Wow.
So there are certain things that you just can't get around.
Okay. When we first initially talked off air yesterday, we talked about the reverse mortgage. Now, I have a near and dear sweet spot for people who are old. I'm old. Who need help, assistance. Usually that's equity in their home. I know in the title business that's a very, it's a niche area that people don't really, know about in terms of how does the title company make a difference when I get a reverse mortgage. Could you really outline a couple of things that you might be able to help a borrower with that possibly they aren't getting from other title companies?
Yeah, I think what we try to do is really just be available for them. A lot of the times, what we find is that they can't necessarily. They have a lot of questions about the documents that they're receiving because on a reverse mortgage, it's about double the size of a normal loan package, and there's a lot of documents that they're just entirely unfamiliar with.
Right.
So at the closing, it tends to take quite a bit of time, and so we try to give our cell phone numbers for the management and myself, so that if there, any questions come up at the table, they can just call us directly, either the notary or the borrower, and right at the table we can kind of walk them through what the documents mean, and that tends to help quite a bit because there's a lot of questions.
Yeah, you talked about title and how to pass title and, a couple of the liens that maybe appear. I think older people are still afraid that when they do a reverse mortgage, that somehow that property is going to be taken away from them. I know that you probably get these same kind of questions all the time. How do you answer those questions?
Well, I try to explain it. It's essentially, it's no different from a traditional mortgage in terms of the way the lien would be processed against their property. With the caveat that it's actually going to be lower. It's until you get as the loan progresses, it goes up. But right in the beginning, it's actually a lower lien than a traditional mortgage, and they're not actually transferring ownership in any way. They're just putting a traditional lien against their house. So there really isn't any difference between getting that and a traditional mortgage.
No, I think that's good. And I think the fact that you're going to go the extra mile by providing your cell phone number, being able to be available if they have any questions. Certainly the notaries you send out to the closings also have, some ability to be able to at least contact you to be able to walk through some of these difficulties that they may have questions about.
Yeah, absolutely. I mean, we try to make sure that every notary that goes out is familiar with this program. Because, like I said, the documents are quite a bit larger. It takes a lot longer, and you got to be prepared to really take the time to go through step by step. It's a different process than just the traditional mortgage where you kind of go in and it's about a half hour.
Right.
These are about 2 hours, and you really got to get into it and know how to explain and how to be reassuring to them.
Excellent. Now, you also deal with trust, I assume, because a lot of older people place their house or a lot of their assets in trust in order to protect it from either, people who would come at it, but also it makes easy transfer when one or both spouses pass away. How do you handle the trust aspect of it?
Well, the trust come up quite a bit. Probably about double what would normally in a normal traditional loan. And so the way that the signature lines go can be a bit confusing. So it does come up where we have to kind of walk through that quite a bit more than almost any other issue. We try to give a heads up to the notary in the beginning. The documents are usually spelled out very well as far as how they're supposed to sign.
Okay.
But a lot of times they'll call, and everyone in our office is familiar with this, and they'll tell them exactly how you need to sign both as a trustee and as an individual, which is a little bit different from a traditional mortgage. But we deal quite a bit with deeds and and trust, so we can walk them through that at any step. And like I said, once they have our direct contact information, they can call us, being myself or the manager, so they'll always be able to get their answer directly.
Excellent. No, I like that. I like the personal service. I like the fact that you're, going to answer questions and that you understand and give instructions to the notaries going out there. Take the time. It's going to take time, and we're here. True Concept Title is new to California. Been around a long time. Tell us a little about that. We have about a minute left.
We've been here about 10 years.
Okay.
We are both in California and in Clearwater, Florida.
I see.
So yeah, we've been working away
Oh, excellent.
About 10 years now.
Excellent. Could you shout out a phone number, a way by which people can get in touch with you, especially concerning what we talked about today?
Yeah, absolutely. Our office number is 866-651-6224. And again, my name is Ryan Crockett.
Ryan, appreciate you coming on the show. Really appreciate the information. I'm sure the people who are listening who are into it, and there's a lot of people right now because it's just the way the world is in terms of reverse mortgages, we're probably going to need that service. Thanks very much for coming on the show.
All right, thank you very much.
Thank you very much. That's Ryan Crockett from True Concept Title. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning into the show. You know, each and every week we bring this show to you. We also record the show and we put it on YouTube. Jeff Barton, the Mortgage Voice, is a show that's been on YouTube for years. We have hundreds of shows on there, and certainly this show as well as last week's show. We have a growing audience. When you go there, click on that you like it, click on that you want to be notified, and you will be. As I say, we put not only this show, but we have a LinkedIn and a Facebook Mortgage Minute that we try to get up there at least twice a week, and that gives you sort of an immediate snapshot of what's going on. This overview show that we do on a weekly basis gives you kind of a macro, and then we deal with our guests, talk to our guests, ask them questions, because on a micro level, they know way more than I do, and they're hands-on with the clients on a daily basis, so they really know what's going on with the mortgage industry, with the mortgage difficulties and everything else. One of our favorites to come to the show each time we bring her on. I'm very grateful, Connie Hernandez from PMA, and she joins us now. Connie, how are you?
Fine, thank you, Jeff, for having me on your show.
Thank you very much as well. Okay, shrinking margins, shrinking loan volume. What are we doing to increase the loan volume? And have you been hit by the hundreds of people offering to sell you leads yet?
Oh, yes, we have, Jeff.
Yep, it's that time of year again.
It sure is. Well, you know, it's just like it's just like an old friend that's now revisited you on turbo.
Right. Right. Earlier in this show, I was talking about a show I watch on Bloomberg, and I go to this person for a lot of information just because they're very informative and been in the business a long, long time. And you see things come up with them cyclically. If you watch long enough, the same thing comes up, whether it's earnings or whether it's, the PE ratios or all these other stock market-y things. But that's what I feel like when it's like this. When loan officers are vulnerable, that's when you find people that are willing to fill the void by having you spend money. And I don't know how good that is, but tell me a little bit about what's happening out there in Covina, West Covina, and your business.
Well, I'll answer the first question first. I mean, I've been around a little bit,
Yep.
close to 30 years now.
Yep.
So marketing today is extremely different from marketing 10, 15, even 20 years ago, So now it's all technology, right? It's all social media. It's very, very different from the knocking on doors and posters that were being sent out and farm packages that we used to work from title companies. Very, very different. Now we're getting, like you said, bombarded by our text, our phone calls, ton of phone calls, ton of emails from tech companies, which, want to offer you a tremendous amount of leads with a commitment of a fee of every month. And I honestly feel from different people that have tried different sources, which, like you mentioned, there's hundreds out there.
Yep.
These are just generated leads from pages on the internet with something like, if you answer these 20 questions, you may be eligible for a $50 Amazon card, right?
Right.
So
right.
You go back to, how good are these leads and what's the return on these leads? And then so you really have to think back, okay, all of this technology is amazing, and I'm sure some of it works if you're working with the right marketing company. But there are some companies that, will feed you, 1,000 leads, and you're only going to still get a 1% out of that,
Right.
maybe 2 if you're lucky. So if you're fortunate enough to find a good company that you can get a decent percentage, even a 2%, for the amount of fees that they're charging, then you're in good shape. You're definitely in good shape. But again, you and I may be a little bit more old school. We believe in more of a personal touch. So rebuilding those relationships are super important, especially for, loan officers or mortgage companies that we're so used to. We were all used to being fed on a daily basis without having to go out and do any kind of marketing.
Right.
So those days are definitely over, and we have to kind of go back to old school Rolodexes, now email, right?
Right. Yeah, I think
And
the development of relationships is always the best way to go. It's a conversation between people that know each other. It's more casual, it's serious, but it's not necessarily daunting. Cold calls are amazingly hard. That's why I've been, like you said, inundated with text. I mean, I just get these texts all the time. But there's one group that always calls. It's the home fix-up people, which are obviously associated with loans as well, right? Oh, you need, $50,000 to fix your house up? Great. I have a loan company. Here they are. That still happens, and I still get those calls, probably 5 a week. It's unbelievable. These people just, it's unbelievable. Never stop. Real estate.
well, solar.
Yeah.
Solar's a big
Oh,
one.
solar. That's another.
Yeah.
That's the other one. I already have solar. I don't care. Go away. Yeah, no. And I think anybody who's listening to the show will realize that these calls are really designed in order to get money from, obviously, the person that they're calling, but also there's 2 or 3 other ways that money comes out of that deal, whether it's the loan, the actual work, the subs that come and also are involved with the project, whatever it is. So it's a huge business, but it's a numbers game. Like you said, you get 1,000 at 2%, that's still not too bad. It's 20, right? So, but I'm not making 1,000 calls. Oh my gosh, I'd just kill myself.
Yeah.
I couldn't do it. Not anymore. I did when I first was in the business. I made 2,500 calls, and this was over, I don't know how many days. I got one lead out of it. I was like, well, I'm not doing this again. But, yeah.
Right.
Tell me what's happening in the real estate world out there. Have we seen inventory rise yet?
I have not seen inventory rise yet in
Okay.
our area. We're still lacking in inventory. I think there's a lot of uneasiness going on with situation with rates. People
Right.
that maybe were thinking of putting their house on the market because they're getting top dollar. They're realizing, well, now what am I getting myself into? Even if I move, whatever loan balance I have to handle is going to be at a higher rate than I have now.
Right.
So
Right, that's true.
Those are some of the the oppositions that potential listings are having to deal with. But I believe that service. And again, we're talking old school.
Yep.
Service ultimately will get you through any difficult situations. Meaning, you don't have a huge inflow of business coming in. Well, now you have to step up your service, right?
Right.
Just like anything, you go to a good restaurant because of the service, right?
Well, the food helps too.
Yes, of course.
That in our business would be the loan product. What are
that would be the loan product.
what is the loan? What are the loan products out there right now that are people are using? Is it conventional? Are they going non-QM? What is it?
Well, honestly, I've seen a bit of a rise in our area for reverse loans.
Okay.
That's still a good option for
Yep.
people that, they're going into a reverse loan and downsizing. It makes sense, right? It's just
Yep.
finding
Does.
those clients and obviously building the relationship and being able to offer those products. The other thing I've noticed too is you still have, I think FHA borrowers are still out there because, people are still buying homes no
Yep.
matter what. We have quite a few agents that I've worked with over the years that are still showing property, and their feedback to me is that they're not dealing with 20 offers and 40,000 above asking anymore. So
That's a good
I
thing.
believe it's an indication that, the frenzy has stopped.
Right.
And possibly we're going back to a more normal situation.
Well, I hope so, although I still see prices rising. Although, because of the big R word, the recession word is dangling out there. Is it scaring buyers off the market? Is it scaring people? I mean, this is all I hear about right now from a lot of the economists that I'm watching.
Well, I don't know that it's scaring everybody because
Right.
there's still activity. There is not as much activity as what we've been used to for the last, 3 or 4 years, maybe
Right.
even a little further back before COVID. But I think overall, it's just we were just so used to such a huge demand. I mean, with the low interest rates, even with the prices being higher, it seemed to be just very, attractive for a lot of different markets to want to buy. Your higher end homes, even your trophy homes, your second home, they were just at all scales. Now I think it's more like, okay, they're getting married, okay, they need to buy a home, right?
Right.
Or, okay, we've outgrown this home, we need to buy a home. Those types of situations, or, divorce situations, life situations
Right.
generally.
Hey, listen, we're up against it. I can't believe that was a quick 10 minutes, but could you... Yeah, exactly. Could you shout out a way by which people can get in touch with you? Terrific agent in the IE and Los Angeles area.
Absolutely.
Thank
you
you.
can find me in downtown Covina, 101 North Citrus, and my direct line is 626-422-2017. My office line, 626-918-2419. Love to help and answer any questions I can.
Connie, thanks very much for coming on the show. Always appreciate it.
Oh, thank you, Jeff. Have a great day.
And you too. That's Connie Hernandez from PMA. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in to the show. Each and every week, we bring to you the best information that's possibly out there concerning mortgages, the economy, how the decisions that you're going to make are going to be affected by what's happening in the world. And we bring great guests to the show. If you want to hear and see the show each and every week, you can go to the radio stations, or you can go to all the different podcasts that we are affiliated with. Daryl, do we have that list there?
We sure do, Jeff. It's Apple Podcasts, Spotify, Spreaker, Stitcher, iHeartMedia, Radio.com, YouTube, of course, and Podclips.io.
Excellent. Yes, if you want to go and see us, we have hundreds of shows on YouTube. Jeff Barton, the Mortgage Voice. Click on that you like what you see. Join up. Make sure that you get notifications that the next show is ready to be aired. We also do a LinkedIn as well as a Facebook show. We call it the Mortgage Minute, even though it's 5 minutes. But regardless, again, information for you to use immediately. That's what we do. I'm Jeff Barton. This is the Mortgage Voice. Okay, so as I said, we bring great guests to the show all the time. Talks about what's happening in their sphere of influence, what's happening in their world. Certainly Charles Giscombe, who is the manager out in Las Vegas, Nevada, as well as a terrific loan officer and a guy who's been around the business a long time, knows how to solve problems. He joins us now. Charles, how are you?
Great, Jeff. Thanks for having me again, as always, man.
Thank you very much, and thanks for coming on the show at short notice. I know sometimes I'm not as good as I could be in terms of, giving you a heads up, but thanks a lot.
Not a problem. I enjoy it.
Excellent. Okay, so the market, it's changing. We're going to see the Fed raise rates, even though that's not mortgage rates, but it does scare people because they hear raise rates and they just think, oh, my gosh. And everybody knows it's sentiment that really kills the duck out here. If people say, I'm afraid and I'm going to, hold back buying stuff, that's when the economy slows down and that's when a lot of bad stuff happens. Are we close to that point now, or are we still seeing rosy skies ahead for the mortgage market and the real estate world?
No, Jeff, actually, that's exactly what's happening. The panic is occurring.
Right.
You hear the different things, and if you're not knowledgeable about what's going on with the Fed, people think that the rates are just increasing in general. It's been an influx of new individuals and also old clients jumping in because they believe that this rate hike is going to come. But they're still ready to transact. They're wanting to do stuff a lot faster right now. Just this week alone, Jeff, at the start of the week, 6 new loan situations immediately that I've never worked with before that said, hey, listen, I heard you're a guy to get some stuff done over at Malibu Funding, and we want to jump in right away.
Oh, that's interesting that you say that from the loan scenario standpoint, because as I said earlier in the intro, you've been around. You know what loan scenarios look like in all kinds of ways and forms. But if you've got people that are saying, hey, what about this and what about that? That's interesting. It also proves that there are ways to get the thing done that may not be the traditional way, but there are ways to get things done.
Absolutely. There's many different loans. There's a loan for everybody. We always say that, Jeff.
Right.
There's a loan for everybody out there. It's just a matter of the information that you have, the due diligence, the experience of your loan officer, and also it takes time to ask the questions and point to paint a situation to know what a person needs or what their financial structure is. If you sit down long enough and take the time, you'll find out exactly what the needs are of an individual and what they actually can and cannot provide. That will determine what loan scenario you send them in. Lately, what's been happening is because of the interest rate, everybody is interest rate conscious. Who's interest rate conscious can't really be if they want to transact.
Right.
Because now the interest rates are high enough, so now you just have to get in. Now it's about a good deal, or it's about doing something before they feel like the interest rates are going to go so high where it takes them out of the game. And then at the same time, we also have other loans that we can do, like Jeff said, not just the traditional Fannie and Freddie and the Ginnie Mae loans, which are FHA, USDA, VA loans. There's non-QM loans, which has been steaming up the market and eating up a lot of that space, and providing individuals alternative document situations such as bank statement loans, CPA letter loans, DSCR loans,
right.
All these types of loans that you can get involved with that don't require you to have the traditional structure, which is tax returns, W-2s, and paycheck stubs. A lot of people are working since COVID, working from home. There's a lot of entrepreneurs that are working. They get paid differently, and obviously when that happens, you write a lot of stuff off, but at the same time, you're still making that good money. If you can show that you have the ability to repay, which is the ATR, then that means you still can qualify for a loan. And at Malibu Funding, we love those individuals. Just as much as we love traditional loans, solving problems is what we try to accomplish here and getting people in the homes.
People have fears about whether they want to get into the market or not. When you have a customer that comes to you and says, what do you think I should do? What do you tell them?
I said, listen, what's the worst thing that could happen? You could try to jump in, you don't get a property, you don't get qualified, you don't win the bid, or you get yourself in a situation. Hopefully, you're with a real estate agent and a loan officer that's going to take the time to get you exactly what you need. Obviously, like we said earlier, interest rates, hey, I tell everybody now, I used to always say, I'm not going to be the lowest rate in town. I'm saying now, I'm definitely not the lowest rate in town now. But I will work hard to get you in a loan that meets the need. And there's a lot of good deals out there. So if you have a good deal, you jump in and you get in. Because people don't understand. Before we had this wonderful market 5 years ago or 6 years ago, we were in the 6 and the 7.
Yep.
Bro. So at the end of the day, they're just not, people have short-term memories and amnesia.
Very.
But it wasn't far ago that we were in 7 and 8, and those were acceptable, and people were jumping at those.
Hey, at the beginning of the year, when rates were, let's say, 2.5% to 3%, let's just say that's where they were, there were still 8 million people who could take advantage of that particular rate. And my thought is always, where you been? These rates have been like this for, 6 months, almost 2 years. So there's always people who are going to drag their feet when it comes to a refi in order to benefit themselves for whatever reason. And I'm not saying it's the wrong decision. I'm just saying that that's the case. So rate itself isn't the most important thing for every borrower. And I think those type of borrowers who are looking for a certain situation or a certain loan solution, they're going to go to people who are willing to take the time and walk them down through different scenarios and different programs. That's what you're doing. That's what you're talking about.
And that's what we're doing, Jeff, and we speak about this all the time. It's taking the time, looking, doing the due diligence, getting to know your client and understand what it is, and explaining to them. So if you have a person who is not as experienced, and I call it innocent ignorance, it's just because they haven't been in the market, they may have bought one or two homes, but they're not doing it every day like we are. So you can't take that for granted. You have to absolutely say, hey, listen, I'm going to make this as painless and seamless as possible. I'll show you everything we have, all the different options, and explain it. Sometimes people say they're interest rate conscious, yes, but they're really not interest rate conscious. What they really are is what's my monthly check stroke? How much am I going to pay every month? That's a lot different than being interest rate conscious,
Right.
because you can give you a non-QM loan that doesn't have mortgage insurance, that doesn't have many different things on it, and that will provide you an opportunity to, or we can give you a 40-year term on that type of loan that will have you writing the same check as a 4.5% loan. And that's a big deal when, if you're looking at that, you're like, listen, this is the same amount of money I would have paid if I would have had a 4% loan. And so there's different loans out there that you can get people into. It's just a matter of taking the time. And trust me, I get a lot of shoulda, coulda, woulda jumped into the
Right.
market when we were at 2s and 3s. Yeah, we all wish, but we're here now, and
Right.
now we're giving you options to still get in the game.
Well, in looking at the rates over the last 3 weeks, almost 4 weeks, we've seen 5.5 be really solid at the 30-year fix. Now, we've seen the 5.1s go up and down a little bit. FHA is really pretty solid, but these numbers at 5.5 and thereabouts for the rest of them, whether it's a jumbo or a VA or any other kind of product, they're pretty strong still. I think those rates, they're better than they were in 2019 before COVID.
Absolutely, Jeff. We were seeing much higher rates,
Right.
And there was way more fear from the banking side. All right, so now we're comfortable. We understand. We've been through this just a couple years ago. We've been through this, so now I think the lenders are saying, hey, we're still lending. These are still interest rates. And Jeff, we're also a traditional loan provider. We work with Rocket Mortgage and these big companies. So if you're still doing a traditional loan, you can still be in the 3s and the 4s. There's a possibility, depending on how much money you are, putting down the LTVs, different things of that nature. But like Jeff said, at a 5.5, whether it's a jumbo loan or whatever we're doing, it's still a really solid rate, and it should not create any fear. If you're looking to get into the market, even on a larger size loan, there's so many options that we have, whether it be traditional or non-QM, which is a non-qualified mortgage, or even a commercial or stated mortgage. We have all these options, and that's why I love Malibu Funding. Jeff gives us an opportunity to stretch it all the way across the board to make sure we help everybody.
Excellent. Chuck, shout out a phone number, a way by which people can get a hold of you. I know that you would appreciate that, and they'll appreciate that once they get a hold of you and be able to have you solve some of their problems.
Absolutely. If you want to get in contact with me, reach out to me, 702-328-5191. That's 702-328-5191. If you email me, it's charles@malibufunding.biz. That's charles@malibufunding.boy Isaac Zenith.
Excellent. Chuck, thank you very much for coming on the show. As always, strong, and we'll talk soon.
Thanks a lot, Jeff. Thanks for having me.
Thank you very much. That's Charles Giscombe. He's the manager for Malibu Funding out in Las Vegas, Nevada. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning into the show. You can go to themortgagevoice.com. That's our website. We have not only this show and a blog that's on there, but also a number of the guests that are on this show you can see there. You can see their profile, who they are, how to contact them. It's a great place not only to sign up and get notifications about when the show is and what our topics are, but you certainly can see a lot of who our guests are and get, as I said, in contact with them ASAP. That's themortgagevoice.com. Look it up. Sign up. I'm Jeff Barton, your guy with the mortgages, and I'm happy to be here today. There's a couple of things I want to get to in the news to use section. Quick question, Daryl. What do Tesla, Peloton, Remax, Netflix, Shopify, Wells Fargo, 7-Eleven, Rivian, Microsoft, JP Morgan, Compass, Coinbase, Carvana, Better.com, and Robinhood all have in common?
They're all owned by Elon Musk.
No, but that's excellent. It used to be, it's all owned by Rupert Murdoch. No, that's wrong. The thing they have in common is they're all laying people off. Now, we talked in an earlier section of the show about recession, the big R word. One of the biggest indicators is employment. Now, non-politically speaking, we have seen employment actually surprise people by not actually growing. And now we'll have 55,000 people apply for unemployment for the first time this week. Now that is up from, I guess, where it was down in the 220, 230 range. So yes, it's up. But unemployment itself is a great indicator of the strength of an economy. But we've got a dichotomy of sorts happening here in the U.S. What we have is downturn in the stock market, rising interest rates, slowing growth in a lot of different countries. Companies, not countries, companies. However, we see employment still very high. I mean, I think it's at 3.6%, kind of the lowest ever. So when we're talking about, is it a recession, is it not a recession, we're going to see 2 straight quarters of negative growth. That's the textbook definition of what a recession is. 2 straight quarters of negative growth, meaning that it isn't growing, it's shrinking. However, with unemployment the way it is, there's kind of been a muddying of the waters. Is it a recession? Is it not a recession? How could you possibly have a recession with this kind of unemployment? I don't know. The R word means nothing to me. You know what means something to me? All these companies I just listed, and there's more. I stopped writing them down. They're laying people off. They're saying they're afraid of what's going on out there in the marketplace. Now, the thing to ask yourself when you're buying a house is, how likely am I to be employed next year? That's a pretty basic question, and it's a question that they ask on the mortgage application, and they check and verify that through your work. Now, there are many loans, probably half the loans being done right now are non-QM loans. So a lot of those particular ability to repay questions get pushed off in different directions. If you do a DSCR loan, which basically says I'm going to buy a rental property and have the rent qualify for the mortgage. So therefore, I don't have to prove I make any money. The only thing I have to do is put, 20% down, 25% down. That is not an ability to pay loan. That's an investment loan, but there's a lot of them out there. There's a company, Jeff Bezos is heavily involved in it. Now, he's not the only one. It's a public company. It's called Arrived or something like that. Is it Arrived? Yes, I think it is. Arrive.com or something. Arrive. Oh, here it is. Arrived Homes. Now, this Jeff Bezos, they call it Jeff Bezos Company. He's just one of the major investors in it. This company goes out and buys homes and rents them out. And because they're a public company, you can buy shares in this company rather than owning your own, bed and breakfast or your 4-unit or your single-family home and renting it out yourself. You buy shares in this company and they do it for you. So this particular model of, not ability to repay, or Jeff Bezos' company, will tell you that the ability to repay in certain aspects is not the most important thing to get the loan. Certainly business bank statement loans, there's plenty of those, ITIN loans. It all really depends on how much money you put down as the security for these loans. Now, there are some, and I hate that, because the reason I say some is because I can't remember the guy's name, okay? But there are some out there who predict that the real estate market is going to fall in certain markets 15 to 20%. Now, it went up 20% last year, so really you just returned to 2020 levels, right? That's what you're thinking. But that's a snowball effect. Anything we talk about, especially with the companies that are losing, or having employees be laid off, or companies that are now, okay, let's just invest in rentals because we think rental properties are the way to make money. All of these things are not great signs to me about the economy. Now, I think companies that just take properties off the market and only rent them, I think that should be not allowed, at least to a certain percent, because the backbone of wealth building in America has always been own your own home, always. And if you don't allow that, you become 17th century London, whereby most of the properties, or 99% of them, are all rentals owned by certain few individuals. And When that happens, you don't have investment in the neighborhood. So you get a rise in crime, you get a rise in vagrancy, you just get a rise in a rundown look. And anybody who looks at the old pictures of London back in the day, yeah, that city looks like it got run over by a coal truck. Let's get to a few more things in the news to use section. Interest rates, 5.5% is the 30-year fix, 4.78 is the 15-year, 5.13 is the FHA, 4.75 is the jumbo. That's a pretty good price still. 5.38 is the 5-1 ARM. The 10-year is at 2.781, and the 2-year is at 3.055. And by the way, if you heard those numbers correctly, that's right. These are inverted. The 2-year is yielding more than the 10-year. What is that a signal of, class? Right, exactly. It's a recession coming. That's what it's been screaming. And this inversion has been at least 10 days into the inversion. Now, it was, under 20 basis points for about a week. Now we're up closer to 30 basis points. That's telling you it's widening. That's not a good sign. It's another indication when you're filling out your mortgage application and they're asking you for the probability of employment a year from now, 10 years from now, 20 years from now, and you have to give them your employment history, keep in the back of your mind that it's going to be more conservative by the lenders. They're going to do more investigation as to your ability to repay, i.e., are you going to have a job next year, the year after? So therefore, the expanse of credit that we wanted to see or continue, not happening. As a matter of fact, credit is at right now, even after this long period of tremendous growth and appreciation in your house value, the credit available for mortgages today is the same as it was in 2008 after the crash. So it didn't expand at all. Not only that, 22%, what's the, let me see, one second. Yeah, here it is. Mortgage demand is at a 22-year low right now. All of these are not great signs. The only good sign that we're seeing is unemployment's good and more houses on the market. Those two things mean, okay, maybe I can qualify for that mortgage and maybe there's a house that I can buy. Certainly 6 months from now, you're going to see a lot of reductions in prices. We've seen, in the top 100 markets, probably 70% of those listings have lowered their price in the last week to 10 days. That's a big deal. Lots going on out there in the economy and in the world. Wish I had the best news for you, but at least this is accurate. I'm Jeff Barton, your voice in the mortgage industry. We'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.